News Talk 94.5 WPTI, 96.7 FM WTOB, and you're listening to the Wealth Guardian Show with Doug Ray, helping you to retire the job yet to keep that paycheck. I'm your host, Doug Ray, and with me is not Bryce Pace today. He's out skiing in Salt Lake City.
Lucky Bryce.
It's my son, Garrett. He's running the board. Hey, Garrett. How you doing, bud?
Hey, Doug. How you doing?
I am great, man. It's just, this first show of the new year, and we're back from a nice long Christmas holiday break, so I'm ready to get going.
Yeah, we got we're back. We're recharged. We got the energy. We're ready to go. And one thing that did accumulate over our break of about 10 days or so is, of course, that mailbag. Listeners are always asking questions, so we figured what better way to kick off the new year than to answer some of the old questions we accumulated in 2024. So here we are. Before we get started, Doug, we always do want to take that time, like we do at the start of every show, for our men and women in uniform, our community first responders. Thank you guys for everything that you do, and also thank you for the families for providing support to your loved one so he or she can operate in very difficult conditions for our safety and our protection. Thank you so much.
Yeah, I especially think of those firefighters this past week out in California. That was awful.
Yes, it's a dangerous world out there, Doug. It really is. It can be. All righty, Doug. Well, as we get into the first question from our mailbag here, we've got a good one from Jan, and she writes us from Boone. She says, Wealth Guardians, I have an annuity that I've had for several years. Now, prior to this year, I would have been assessed a penalty to take my money out. But now I've had it long enough that I can withdraw my money without penalty. Should I take it all out now?
Well, hey, Jan, good question. I'll tell you, though, there's a lot of data here that we would really need to be able to answer that question. You say annuity. Well, there's 4 types of annuity.
Exactly.
We need to know which one you have. Is
right.
It a fixed annuity, which is like a CD?
Mm-hmm.
Is it a variable annuity? Has a bunch of mutual funds in it?
Yeah, tied to market risk. Yep.
Is it a fixed indexed annuity that, has upside, no downside? You really need an evaluation of the product that you have, because I just can't say, hey, I should cash out and go do something different. The other thing you need to know about this, is this a qualified annuity or a non-qualified annuity?
Absolutely.
If it's a non-qualified annuity, which means you put after-tax money in it and it has grown over these years, if you cash it out, that growth is taxable.
It is.
Now, you do have an option. You could do what's called a 1035 tax-free exchange into another annuity.
Right.
Without knowing any of that information, we just really can't give you, black and white advice.
Yeah, especially, Jan, with it just being a question kind of in a vacuum like that, we also have, no understanding of your other finances, any other investments you may have. That being said, if you want to reach out, you want to give us a call, we'd love to talk to you and discuss this annuity. But hopefully that's at least just a tidbit of information to get kind of your gears grinding on it and see if you need to reach out to a financial planner.
Let me just add one more thing about this annuity. I mean, if it's been performing well, maybe you should keep it, because now it's 100% liquid.
True.
The other thing is, and this gets kind of down in the weeds, if it's an indexed annuity, a lot of these companies towards the end of the surrender charge period will drastically lower your ability to make money with the market. If that's the case, then maybe you should move it somewhere else.
Yeah. Look to get a different option, see what's newer out there.
And if it's what we call a multi-year guarantee annuity, then be careful, because most of the time, if you let it roll over automatically, it rolls over into a much lower interest rate.
Another good point. Absolutely. If you're just tuning in, you're listening to the Wealth Guardian Show, and we are getting in to that mailbag from listener questions. Next one up, Doug, we got a good one from Pam in Lexington. She writes us, she says, my husband is 9 years older than me, so we have a substantial life insurance policy on him to make sure that I'm taken care of when he dies. But what happens if State Farm goes bankrupt at some point and can't pay the death benefit?
I'm not going to say that can't possibly happen. There certainly is a potential, but it's a very, very low potential probability of State Farm, a company of that size and A+ rating,
That's had that history too,
going out of business. And what you have to understand is what backs life insurance companies up. Unlike banks and unlike brokerage companies, they're not in the risk business. They're in the insurance business. And when they take in a premium, whether it's your premium for that life insurance policy or the premium for your homeowners or your automobile, they invest that money in very safe investments like mortgage-backed securities, government bonds,
Yep.
kind of thing. Very small amount of their portfolios goes into stocks. And if they go into stocks, they typically the blue chip dividend producing stocks.
Mm-hmm.
So the odds of your company like State Farm going out of business are extremely small. And I emphasize, I'm going to say it's not going to happen or can't happen, but it's extremely small. What do you think, Garrett?
Yeah, it's in the case of that, there is something out there. If we're talking about banks, right? Most people understand that there's something called FDIC insurance, and that typically insures each depositor in each account for up to $250,000. Now, that's a federal guarantee of federal backing. There is an association called the State Guarantee Fund or the State Guarantee Association that does. And that's state regulated, by the way. So each individual state has their own terms. We're speaking to you from the state of North Carolina. And for annuities and life insurance, it is up to $300,000 per policy. So if something were to happen to that company inside the state of North Carolina, effectively what would happen is the other insurance companies that are still doing business in North Carolina would effectively buy out that old policy from the bankrupt company. And that's another level of guarantee that you would have. That being said, it has never been used in the history of our state because these insurance companies typically do have really, really good, solid financial books. But great question. And there is a level of protection for you out there in the State Guarantee Association.
Yeah, let me add to that. When I first got this business back in the late 80s, there was a couple of insurance companies that did go under because they got wrapped up in the junk bond fiasco that Michael Milken brought on. And the bottom line was other insurance companies step in and just bought out the policies.
The state didn't have to get
The
involved.
state never got involved. The thing that happened then was that instead of getting this really high interest rate that the client was getting because it was backed up by junk bonds, since the new company came in and was backed up by grade A bonds, their interest rate dropped, but they didn't lose a penny.
Absolutely. All right, Doug. Well, let's get into our next question here. We have a pretty decent one from Jake in Winston-Salem. He says, Wealth Guardians, I have enough cash to pay off my house. Well, congratulations, Jake. He says, however, since the mortgage interest rate is so low, I'm not sure how much it benefits me to pay it off in full. But it's not earning any interest in the bank, so I might as well pay it off? ? Well, given the way that mortgage rates have risen so rapidly over the past 2 years, really since the pandemic, I guess it's been going on 4 now. If you have one of those older mortgages that you got kind of in the middle 20 teens, like 2015, 2016, 2017, when you're talking, 2.2% on your mortgage, right now you're essentially sitting on the close to the equivalent of gold compared to everyone else in mortgages. You're right in that given current market conditions in mortgages, it doesn't make a ton of sense unless you just absolutely want it for the peace of mind to just, bust your back and pay off the mortgage. That being said, we can't put a valuation on peace of mind. And for a lot of people out there, having that house paid off as they're getting kind of into those later stages of life, perhaps preparing for retirement, can make a world of difference. And so if that's where you and your family are thinking, no problem paying off that mortgage. Are you mathematically correct that it's not really as advantageous to do it with your old mortgage interest rate compared to what we're seeing today? Sure, you're correct there. But again, we can't put a price on peace of mind.
Yeah, I think you can still get some decent CD rates around 4% rate. But yeah, peace of mind is, that's great to have.
Absolutely. Well, Doug, I know we're getting close to the end of this segment, but before we do, you know what's coming next.
No, you got one too.
Yeah, I got to try to stump the Dugger here. So I think this one is going to be interesting out here for both for Doug and the listeners. So here's the trivia question. Most people understand that the president's jet, right, it has a call sign. In fact, there's been a movie made about it. It's called Air Force One. Here's the one that may be a little bit trickier, though. What is the call sign of the president's personal helicopter?
Huh.
Okay, stick around for the answer to that trivia question to see if we stump Doug on the other side of this short break. This is Garrett Ray. With me is Doug Ray, and the show is the Wealth Guardians, helping you retire the job and keep the paycheck. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB. News Talk 94.5 WPTI. 96.7 FM WTOB. Welcome back to the Wealth Guardian Show, where we help you retire the job and keep the paycheck. I'm Garrett Ray in the Wealth Guardian studio, along with Doug Ray. And in this segment, we're still discussing your listener questions from that mailbag. Now, before we get to this trivia question that left you hanging at the end of our last segment, I want to ask you this. Are you planning to retire in the next 7 to 10 years? Have you met with a retirement income certified professional who's also a fiduciary? If not, I want to invite you to take us up on a complimentary review of your current situation. As certified retirement planning specialists, we'll put together a customized written plan with strategies for portfolio allocation, income distribution, Social Security filing, and tax efficiency, with the additional benefit of often reducing both the risk and the fees of your current portfolio. If you've put aside at least $400,000 and want to take us up on this no-cost, no-obligation review, call us at 336-391-3409. Or go to our website, thewealthguardians.com. That's thewealthguardians.com to learn more. Let us show you in black and white how you can retire the job and keep the paycheck. All righty, Doug, let's get back to that trivia question. Now, I'm not like Bryson. I don't have all the fancy sounds and the the ringing of the bell or the booing if you get it wrong, but we'll just have to go just discussion here. So to bring everyone, but all the listeners back, we were talking about how the president gets around, right? Pretty soon we're going to have a change of presidents here. Most people understand that the jet, that is a military jet that the president uses to travel for most of his international events, has a call sign. It is called Air Force One. In fact, Harrison Ford was in kind of a cheesy movie about it, also named Air Force One. But most people probably don't know, and I'm curious if you do, Doug, what is the call sign of the president's helicopter?
Marine One.
Marine One. He got it 100% correct, folks. I would expect no less from a former naval aviator. And yeah, that's lots of times you see if the president is flying kind of regionally or in the States, he'll take a Marine One. Often when the president is going on retreat to Camp David, he typically uses Marine One. But yes, we got Air Force One, that's the jet, and then Marine One is, of course, the president's personal helicopter.
Actually encountered Marine One when I was on active duty. Was President Reagan was flying into Navy jacks for something or other. And of course, when the president comes in anywhere, they clear all the airspace out.
I'm sure you had probably a 50-mile cordon around that. Yeah.
You can't get anywhere near. I wanted to meet the president, but I didn't get a chance to.
Oh yeah, it's and they do that even locally. When the whole campaign was going on, one candidate or the other would fly into Greensboro at PTI, and traffic would shut down. It's a whole security kind of just episode there.
Oh yeah, I remember when the Democratic National Convention was in Charlotte and President Obama came in. That was a nightmare for traffic.
Oh, I'm sure it was. All righty, Doug, let's get back into those listener questions. We have a short but sweet one. I think this is going to be a pretty popular one with the listeners out there from Andy in High Point. He simply writes us, he goes, should I buy gold coins or gold bars or no gold at all?
Garrett, I wish I had a gold coin for every time we've been asked that question.
My goodness, this is such a popular question with listeners out there, wanting to know about gold, what we think about gold. Doug, I'll let you go first, and then I'll kind of give my 2 cents on it. But yeah, what are your thoughts?
Well, I think everybody probably should have some exposure to precious metals of some sort. I certainly do. I tell everybody I do mine a very different way from probably the way they're going to want to do it. My grandfather got me started when I was a kid. He'd give me a silver dollar every birthday.
Yeah.
I started collecting a lot of peace dollars and Morgan dollars, and over the years, it just kind of grew into a hobby for me.
Sure.
And so I collect the old coins, gold and silver coins, and to do that, it's a fun hobby, but you've got to put some study into it, and you got to learn the numismatic value, which includes the grade of the coin, the mintage of the coin, that kind of stuff, and you're going to pay for some of these more popular coins quite a bit more than, a whole lot more than.
Or if it has like a special mintage or something like that. Yeah.
But what I've been telling our clients all these years, I said, look, if you don't want to get all involved in numismatology, then just simply collect the American gold and silver or the Canadian maple leaves or whatever. That's a simple way to do it.
Yeah.
You're going to pay above spot. That's the difference between the bid and the ask of the coin.
Right.
But, start a collection, dollar cost average into it.
Okay. So I love this question because the way that Doug does it and the way that I would do it are completely different. So this might be a generational difference, but I really have no interest in buying physical coins that, if I get enough of them, are going to weigh 500 pounds.
Yeah, you and Adam are going to get them.
Yeah, I'm sure we will. But so if here's how I would do it if you want part of your portfolio, right? And I also agree with Doug that some allocation inside your portfolio makes sense. Let's call it 5 or 10% of your overall investment portfolio is in precious metals. Now, here's how I would do it. Ticker symbol GLD, right? So it's an ETF that follows the price of gold. It updates in real time. And essentially what you do is, a lot of people think that gold is a hedge against inflation, this, that, and the other. Bryce and I did a deep dive in this 2 years ago. It actually is an okay hedge against inflation. It's a better indicator of consumer confidence. That's really what it is, right? So when consumer confidence starts to go down and starts to hit an all-time low, when people are pretty miserable, interestingly enough, the price of gold starts to go up, right? People start fleeing into gold. And then when everything's all hunky-dory and people are happy and consumer confidence is high, no one's really interested in gold. No one cares. So the price of gold goes down. So what I would say is if you're going to invest, let's call it 5 or 10% of your portfolio in gold, ticker symbol GLD, and you start to see that percentage inside your portfolio creep up to say 6, 7, 8%, start selling, because I would bet you that the price of gold is relatively high. And then if, conversely, a couple months, couple years later, you start seeing the percentage of gold go down in your portfolio, let's say it falls to 4 or even 3%, start buying, probably pretty cheap. That's how I would do it and how I would trade it inside of a portfolio and still kind of keep that parameter of 5 to 10% of that asset allocation. All righty.
That's one way to do it.
Absolutely. And different philosophies, folks. If you're just tuning in, we are listening to the Wealth Guardians radio show, and we're still talking about those listener questions inside the mailbag. All righty, Doug, next question we have Matt in Reedsville. He says this: I stopped my 401k contribution several months ago because of an election uncertainty. I was thinking I'd wait until things in the world get back to normal, but the market didn't crash like I thought it would after the election. Should I just go ahead and start them back up? And he's talking about his 401k contributions.
Man, oh man, oh man. I could just scold you, Matt.
I know.
I'm being honest to Pete. Here's the thing. Number one, you stopped your contributions because you were scared of an election.
Yeah.
History has proven that means nothing. The other thing you did, if you get a company match, you lost that. That was free money.
Yep.
And here's the other thing. the markets are going to go up, the markets are going to go down. When you are putting money into your 401k on a consistent basis, if your pay period's biweekly, you're doing this thing called dollar cost averaging. When the market's up, you're buying high. When the market's down, you're buying low. Overall, even the long haul, you should be able to have more shares in the portfolio at a lower cost basis than in the future. So yeah, you really messed up, Matt. Sorry to be so blunt.
Yep.
You messed up.
Yeah, folks, we've looked at this data quite a bit, and what letter beside who is president and is in the White House and in the Oval Office doesn't have a whole lot of direct correlation with how the market performs. Guess what? The market makes money when a Democratic president is in office, and the market makes money when a Republican president is in office. So they don't really care about red or blue. The only color that the market cares about is green, folks. Okay?
In fact, let me just add this. Honestly, if you've got time ahead of you for retirement, you ought to be hoping for a market correction.
No kidding.
Yeah.
So you can get some cheaper prices.
You remember what they say? You buy low, you sell high.
Yeah.
People buy high and sell low.
I know. We haven't had a whole lot of buying low here lately. The market's been on a tear. All righty, folks. Well, I tell you what, if you want to take us up on that complimentary review of your current situation, if you like what you've heard today, give us a call. 336-391-3409. We'd love to sit down and talk to you. Doug and I would love to take a look at your personal situation, talk about your goals, talk about your vision of retirement or just investing in general. Take us up on it. Next question here, Doug. Lisa in Stokesville writes, there's a section on my 401k statement showing that I can expect to create an income of about $4,000 per month from my current account balance. What is your thoughts on that number? How reliable is it? And what are they basing it on?
Yeah, I've seen those quite a bit. I think they started those estimates maybe a decade or so ago. How reliable is it? I don't know. I wouldn't bet the farm on that number.
Yeah.
It depends on a lot of things. And what they're doing is they're basically extrapolating out how much you put in and growth rate and that kind of thing. And saying, okay, if you continue to do that, you get this certain rate of return, then by the time you're 60, 65 at retirement, then based on a certain distribution percentage, you ought to be able to get that $4,000 a month. I just wouldn't look at that number too closely. What you should do is every year evaluate your situation. And if you can't do it yourself, then come to us or some professional. And, we have annual reviews with our clients, and we do exactly that with their total portfolios and situations. We show them how much they're going to have, at the certain various ages in retirement.
Yeah, we'll give our clients kind of milestone ages. Okay, let's see what the nest egg looks like when you turn 70, 75, 80, something like that, just to give people an idea. And Doug's exactly right. What they're doing is they know your contribution pattern. They're assuming some sort of rate of return that's probably somewhere around 8, 9, 10%, which is basically just the overall stock market historical returns. And then they're assuming a retirement age, let's say 65, and then some sort of fixed withdrawal rate. Rule of thumb typically is around 4% per year of that portfolio, and breaking that down into a monthly amount. As Doug mentions, not very reliable because that's only a snapshot of one small part of your portfolio. Most people have a lot of other things going on in their personal picture. But hopefully that answers your question, Lisa, on exactly how they're getting that number. Just understand that's not your full picture, and it isn't for most people. Well, unfortunately, Doug, that is all the time we have this week. We're coming up on the hard break. Thank you for joining us. We hope that the rest of your weekend is everything you want it to be. This is Garrett Ray, along with Doug Ray. The show is the Wealth Guardians, helping you retire the job and keep the paycheck. And remember, listeners, sound financial plans do not create themselves. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB.